Hello, welcome to the lecture about assurance. I am Marjolein van der Ka, and in this video I will explain the definition of assurance and the added value of assurance in integrated reports. In addition, I will go over the organizations, laws and regulations and guidelines relevant to assurance for integrated reports. The integrated reporting process starts with integrated thinking, with topics such as strategy, mission and vision. It continues with integrated managing, including topics such as policy and procedures, risk management and dashboards. An integrated report is developed as a result for the external stakeholders. As you can see, assurance is the final step of the integrating reporting process. This is the main topic of this video. What is assurance? Assurance refers to the methods and processes employed by an assurer to assess an organization's disclosures about its performance as well as underlying information, processes and systems, using suitable criteria and standards in order to increase credibility. Assurance includes the communication of the results of the assurance process in an assurance statement. Assurance can be provided for different types of information. It can be provided for financial information. The most well-known are the annual statements, the balance sheet and the profit and loss statements. Assurance can be provided for non-financial information like sustainability reports. And assurance can be given for an integrated report, integrated financial and non-financial information. What is the value of assurance? Assurance is necessary to provide confidence to users that the corporate reporting process and controls produce reliable, accurate and complete information and that the appropriate principles as specified by the selected reporting standards, guidance and frameworks have been properly applied. Investors and other decision makers need a broader base of information to inform capital allocation and other decisions, including an expectation that reported data is reliable. As reporting evolves, there is a corresponding increase in demand for assurance engagements on such new extended types of reporting. As the drive towards a global system for sustainability-related reporting continues, investors, regulators and policymakers are highlighting the important role of assurance in ensuring high-quality reporting. With the growing importance of and reliance on sustainability information, low-quality assurance is an emerging investor protection and financial stability risk. But what is greenwashing? Greenwashing is the difference between what the company says regarding its commitment to sustainability and what the company does as evaluated by external parties. Companies claim their cars, whether electric, hybrid or diesel, are more eco-friendly, but this may not always be the case. For example, Volkswagen was exposed in 2015 by the US Environmental Protection Agency for fraudulently cheating technical tests aimed at measuring the emissions of diesel engines. This scandal has come to be known as Dieselgate. This raised awareness of the high levels of pollution that diesel engines can produce, despite the claims that they are cleaner than petrol engines. Due to much greenwashing, organizations fall short in reporting on critical topics. Because of this, a new law, the Corporate Sustainability Reporting Directive, the CSRD, has been introduced. The CSRD provides specific provisions requiring assurance of sustainability information. The management report must contain the provided sustainability data. It is essential to ensure a connection between financial and sustainability reporting, so the information is fully informative for all stakeholders. This is because an organization's long-term viability depends on sustainability factors. Separating the two will not provide a complete picture to the reporting users that need such a complete overview for sustainability decision-making. We can distinguish between reporting guidelines and assurance guidelines. In this video, we will focus on the assurance guidelines. Before I explain the content of the guidelines, I will first tell you briefly who developed these guidelines. The IAASB develops auditing and assurance standards and guidance for all professional accountants. The International Federation of Accountants, IFAC, facilitates the structures and processes that support the operations of the IAASB. Accountability is a global consulting and standards firm that works with businesses, governments, investors, and multilateral organizations to advance responsible business practices and improve long-term performance. As part of the audit of financial statements, auditors already have responsibilities under the International Standard on Auditing, ISA 720. The auditor's responsibilities relating to other information. As part of their duties, auditor must read the other information that comes with financial statements and determine if there is a material inconsistency between it and the financial statements, the auditor's knowledge from the audit, or whether the other information appears to be materially misstated. But what do we understand under other information? First, it is information that is not part of the financial statements. For example, the management reports, appendices, and sustainability information. In the image, you can see an example of other information included in the annual report of Tony Chocolonely. The annual report of Tony Chocolonely is an example where the ISA 720 guideline has been applied. In the previous slides, you saw the description of the other information included. In this image, you can see that the accountant concluded that the other information is consistent with the financial statements and does not contain any material misstatements. The standard for assurance over non-historical financial information is ISAE 3000. This standard is issued by the International Federation of Accountants, IFAC. It consists of guidelines for the ethical behavior, quality management and performance of an ISAE 3000 engagement. It is typically used for internal control, sustainability and compliance with laws and regulations. Here you can see an example of the annual report of ABN AMRO, in which the ISAE 3000 is adapted. The ISAE 3410 is a topic-specific assurance standard under ISAE 3000, which provides requirements and guidance specific to engagements on greenhouse gas emission statements. The ISAE 3000 and 3410 guidelines distinguish between limited and reasonable assurance. Reasonable assurance gives a higher level of assurance than limited assurance. If there is limited assurance, it is stated that nothing has come to our attention. According to an IFAC survey, ISAE 3000 and 3410 guidelines are the most widely used standards for sustainability. However, ISA 720 was not included in the survey as it is not a specific sustainability guideline. There are 5 elements to engagement in assurance according to the World Business Council Sustainable Development. The first element is engagement. This consists of 3 parties: the management, the assurance provider, the auditor or another party, and the stakeholders of an organization. The second element is the identification of the subject. This is the object on which assurance is given, for example, water use. These subjects are derived from stakeholder engagements. The third element is a criteria by which the object will be verified. For example, the Global Reporting Initiative GRI standards can be used to check the object, water use. The procedure for obtaining evidence is 4 elements. The last element is a formal report, in which the assurance provider writes the conclusion. And always remember that the auditor can only assure what has been done. We hope you learned a lot from this lecture. Thank you for watching.